Learning the adjustment entries for bad debts. What is bad debts? When a debtor is unable to pay me the amount, then they become bad and are placed in profit and loss account debit side. Those amounts are called bad debts. Now, bad debts in itself is a very vast topic because we have entries like bad debts recovered, provision for bad debts, provision for discount on debtors, and so this has to be learned properly because there are 90% chances that you will get an adjustment entry in final account relating to bad debts and the following topics. So let's start. First entry for bad debts taking place is bad debts being my expense, bad debts account debit to debtors. Okay. Now transferring this expense to trading and P&L account, the entry will be P&L account debit to bad debts. P&L account debit, I am increasing my expense in P&L account, and bad debts, I am actually cancelling this bad debts debit and bad debts credit, and the entry will be P&L account debit to debtors. So see the net entry, P&L account debit to debtors. Why so? My expense is increasing because of bad debts and the debtors value is decreasing. Say I had 5,000 as debtors, but a debtor became insolvent and he cannot pay me 500. So the value of debtor will remain 4,500 now. So the value of debtors is decreasing. So debtors have debit balance, but when I credit the debtor, then it will show a reverse effect. So this is the ultimate entry. Now you have to be very smart while putting it into your trading and P&L account and balance sheet. I will show you with a small working. See, if bad debts is given in trial balance, be very careful here. If bad debts is given in trial balance, okay, if it is given in trial balance, it means what? It means in balance sheet, bad debts is already deducted from debtors because it is already in trial balance and not separately placed in your additional information. So remember this, it means in balance sheet, bad debts is already deducted from debtors. This is a very important point. If you get bad debts in the trial balance itself, don't go and again deduct it from the debtors in your balance sheet. It has already been deducted because such bad debts are present in your trial balance. So what you will do, the amount of bad debts what is given is just write in your P&L debit side, bad debts is your expense. So when it is in trial balance, only one effect, that is in your P&L. When you do these entries, then you'll understand it much better. So if bad debts is given as an adjustment entry, then what will you do? As adjustment, as an additional information. Below the trial balance, you are given additional information. There you have the bad debts amount. So now in additional information, so you will have to give it a dual effect. In balance sheet, deduct bad debts from debtors. In balance sheet, what will you do? Debtors minus bad debts, which is given in your additional information. And you will also write it in P&L debit. Here what were you doing? If it was given in trial balance, you will just writing it in P&L debit. But if it is given in additional information, then the entry has not been passed yet, so it will have a dual effect now. So you not only debit it to your P&L, but you also, this is very important here, it is giving a one side effect, but here it is giving a two side effect since it is given as additional information. So in balance sheet, you have to do debtors minus bad debts, and the amount has to be taken out. We'll solve it by using an example for better understanding. Okay, the question is now, prepare final accounts from following information. See, in the trial balance, what I have been given: debtors 1,50,000, bad debts 3,000. These bad debts are there in the trial balance. So for 3,000, there will only be one-sided effect. Okay. Additional information: write off 1,500 as bad debts. Now additional 1,000, I will call it as further bad debts. So for this 1,500, I will give a dual effect because it is placed in additional information, and for this 3,000, only a single effect because it is placed in trial balance. Let's start. Debtors 1,50,000. So in my balance sheet, debtors 1,50,000 in the inner column. Okay, what do I do for the bad debts? Only for this 3,000, as it is in trial balance, I will place here bad debts 3,000. Only one effect, no deducting from balance sheet because it is already done. This 1,50,000 is balance after deducting this 3,000. So I will not do it again because this has already been done. That's why I am getting this bad debts in the balance sheet. I am getting it from the balance of trial balance only, no? So this is done. Okay. Additional information: write off rupees 1,500 as bad debts. I will call this, whenever it is in additional information, further bad debts. So what will I do? I will add these further bad debts to my P&L account, 1,500, and my total bad debts will be 4,500, and in the balance sheet From debtors, I will deduct further bad debts. That is minus 1500, and in the outer column 148,500. So this is how I give the effect of bad debts in my accounts. Let's learn about bad debts recovered now.